Where can you find high dividend paying stocks in 2024? Well, at least in this video you can get a taste of abundant dividend streams. There are 5 high dividend stocks on offer, including from energy and finance sector players. Hello, my name is Janne Sokkel and I've been investing in stocks for decades. And I truly think that dividends are an excellent way to generate passive income. A growing dividend stream also helps me in pursuing financial independence, which is one of my most important long-term goals. But let's get to the business now. Horizon Technology Finance is the first intriguing high dividend paying company. Horizon Technology Finance is an intriguing venture capital platform that offers various structured debt products to life science and technology companies. This company provides meaningful debt capital to target companies, which can be utilized akin to equity, but with significantly lower costs and ownership dilutions for investors and employees. Among its strengths are carefully selected investment targets for loans and the efficiency of the underwriting process. The stock price of Horizon Technology Finance is down. Currently, the stock is trading at around $12, significantly lower than its peak in 2021. However, it's worth noting that in Horizon's loan portfolio, only less than 10% consist of loans with lower credit ratings of 1 and 2. Currently, Horizon Technology Finance offers a dividend yield of 11.2%, and the company has been paying dividends at roughly the current level for a decade. So, if you are looking to grow your dividends annually, then this stock might not be your best choice. The next high dividend stock is Hess Midstream. Hess Midstream is a growth-oriented energy company that owns, operates and develops assets in North Dakota. These assets include facilities for the processing of oil, gas and produced water. Hess Midstream provides a valuable value chain from the extraction area to gathering systems, storage, terminals and export, essentially having the entire value chain under its control. In recent years, Hess Midstream's stock value has been steadily increasing. Currently, it stands at around $34.25, marking an increase of over 18% in the past years. The future looks promising as well. The company anticipates its adjusted EBITDA to rise by 20% annually over the next few years. You can receive returns on capital in several ways. The majority has come in the form of dividends, but share buybacks has also provided returns. At this point, the dividend yield is 7.6% and dividends have been increased on average by over 11% annually over the past 5 years. However, a risk with this stock is high payout ratio. Over the long term, dividends may be cut if earnings don't improve sufficiently. The next high dividend stock is Enterprise Products Partners. This company specializes in providing architecture for transporting and storing crude oil, natural gas and chemicals. The company operates among other assets, 40 natural gas processing plants, 7 propane fractionation plants, and storage capacity for 217 million barrels of NGLs. Additionally, the company has numerous additional production facilities in the pipeline, especially related to NGLs. Enterprise Products Partners stock has been gradually trending upwards in recent years. At this point, the stock is trading at around $28.10, marking an increase of over 10% in the past year. A significant reason for appreciation is the considerable growth in the transportation volumes of natural gas, NGLs, crude oil and petrochemicals compared to the previous year. At this point, you're getting a dividend yield of about 7.3%, and the payout ratio is still comfortable below 80%. Enterprise Products Partners has been increasing its dividend for 25 consecutive years with average annual increases of around 6.8%. The fourth high-paying dividend stock in 2024 is Gaming and Leisure Properties, and this REIT specializes in gambling and owns 62 premium class properties across 19 different states in the United States. In total, the company's properties encompass over 29 million square meters and nearly 15,000 hotel rooms. Rising interest rates have increased gaming and leisure properties expenses, which has naturally reflected in the negative development of the stock's value. Currently, the stock is priced at $43.20, marking a decrease of almost 16% over the past year. However, it's worth noting that in the latest quarterly report, key metric for the REIT company, FFO, was approximately $10 million higher compared to a year ago. At this point, you are receiving a 7% dividend yield from this stock, and the payout ratio is still at a reasonable level of about 80%. Over the last 5 years, the dividend has been increased by approximately 2.3% annually, so the dividend pool hasn't increased rapidly. Stellus Capital Investment is the last high-paying dividend stock. It's an externally managed, closed-end and non-diversified investment company. And this company focuses on providing financing to lower middle-market businesses, which practically means investments range from $20 to $100 million per transaction, targeting private sector companies with EBITDA between $5 and $50 million. Stellus Capital Investments stock value has been stagnant for quite some time. At this point, it's around $14, hovering around the same level as it was 10 years ago. The company's investment portfolio is well diversified across different industries. The two largest segments, business services and healthcare, make up 36%. Geographical diversification is also adequate. The top 3 states, California, Texas and Florida, account for less than 50% of the portfolio. Additionally, the loan portfolio is on a solid footing. Only 2% of issued loans fall into weakest credit ratings of 4 and 5. Dividend color incoming. At the current valuation of the stock, you could receive a hefty dividend yield of about 11.4%. Payout ratio is slightly elevated at 83.75%. In practice, the annual dividend amount has been hovering around the current $1.60 mark for a decade. excluding the temporarily lower dividend amount caused by the coronavirus crisis. So that was my own top 5. Many high-paying dividend stocks can be found in finance and energy sectors, and the stocks I presented benefit fully from the growing US economy. While high interest rates have indeed slowed down the earnings pace for most companies, these companies have managed to incorporate this increased cost well into their prices. Would any of these stocks want they were into your portfolio, or do you have ideas for better dividend stocks? Please leave a comment, and if you are really interested about dividends, please subscribe my channel. My channel is all about dividends. Thanks for watching. See you next time.